Section 1. Introduction. Bitcoin's big question for 2025. As the digital world continues to evolve, where will the price of Bitcoin stand in 2025? It is a question that splits opinions. Fervent believers, staunch skeptics. Some envision a future where Bitcoin's value soars to astronomical heights, reshaping the very fabric of global finance. They see a digital revolution in full swing, with Bitcoin leading the charge as the new global reserve asset. This is the boom scenario, a world of unprecedented digital wealth. It is a powerful and captivating vision that has drawn millions of investors into its orbit. On the other side of this great divide are those who view the entire phenomenon with caution, dismissing it as a speculative bubble fueled by little more than hype and collective delusion. They point to its infamous volatility, its lack of intrinsic value, and the ever-present threat of regulatory crackdowns. For them, Bitcoin is a house of cards, beautiful in its complexity, but destined to collapse under its own weight. This essay will explore these contrasting viewpoints with a calm and measured tone, aiming to provide clarity rather than to promote any single outcome. We stand at a critical juncture on this day, September 22nd, 2025. The digital currency has already made an indelible mark on the world, but its future path remains shrouded in uncertainty. Is Bitcoin on the verge of its most explosive growth phase yet, validating the predictions of its most ardent supporters? Or is it teetering on the edge of a precipice, a cautionary tale for future generations of investors? The answer is not simple. Section 2. The Bull Case. Why some predict a skyrocketing price. The primary argument for a significant price increase in Bitcoin is rooted in its fundamental design, specifically the halving. This process is coded into Bitcoin's protocol and happens roughly every 4 years, most recently in 2024. The halving cuts mining rewards in half, slashing the rate new Bitcoins are created. That programmatic supply reduction creates scarcity. If demand stays the same or grows, fewer new coins pushes prices up. Historically, halvings have been followed by major bull runs. A second driver is rising institutional adoption. Bitcoin used to be mostly retail and tech enthusiasts. Now the landscape has shifted. Major financial institutions, hedge funds, publicly traded corporations have allocated portions of their treasuries to Bitcoin. This smart money brings massive capital. It also adds legitimacy and stability, nudging conservative investors and wealth managers toward Bitcoin. Third, Bitcoin's digital gold narrative is taking hold amid economic uncertainty and rising inflation. Proponents say Bitcoin is a store of value, a hedge against fiat devaluation, like the US dollar. These three pillars, program scarcity, institutional validation, and digital store of value, form the bedrock of the optimistic 2025 outlook. Bullish analysts combine these factors, projecting that reduced supply plus surging demand could create a perfect storm for price appreciation. Section 3. A measured perspective. Finding a realistic middle ground. While the bullish arguments are compelling, a more realistic assessment requires acknowledging the inherent volatility and cyclical nature of the crypto market. History has shown that Bitcoin's path upward is never a smooth, uninterrupted line. Following past halvings, the price has reached new all-time highs. These rallies were followed by significant corrections, where the price dropped by as much as 80% from its peak. Therefore, a realistic view for 2025 must account for this pattern. Expecting a straight shot to a new record without any turbulence is to ignore the asset's well-documented behavior. Considering the positive driver's historical patterns, a realistic price range could fall somewhere between 100,000 and 200,000. This projection assumes continued steady adoption by retail players, institutional players, a stable macroeconomic environment, and no catastrophic regulatory setbacks or catastrophic technological setbacks. This range represents a significant increase from previous cycles, but stops short of the more sensational, headline-grabbing predictions. It reflects a market that is maturing, but still subject to strong speculative forces and sentiment swings. An essential part of a realistic view is an unwavering respect for volatility. Even within a broader uptrend, investors should be prepared for sudden and sharp price drops, 30% to 50%. Ultimately, the realistic case is one of cautious optimism. It suggests that while significant growth is plausible, the journey will be a roller coaster. Beyond the data-driven bull case and the measured, realistic view lies the realm of pure hype. This is where predictions of $500,000 or even $1 million per Bitcoin by 2025 flourish. These forecasts often originate from social media influencers, aggressive venture capitalists, market commentators who benefit from generating excitement and media attention. While incredibly alluring, these predictions are typically based on exponential models that extrapolate recent growth far into the future, often ignoring the very real obstacles and risks that could derail such a meteoric rise. The greatest danger of the hype cycle is that it often disregards the significant risks looming over the crypto ecosystem. The most prominent of these is regulation. Governments around the world remain uncertain about how to handle Bitcoin. A coordinated and restrictive crackdown by major economic powers, such as the United States, the European Union, could severely hamper adoption, limit access through exchanges, cause the price to plummet. These regulatory actions can be swift and unpredictable, turning market sentiment from euphoric to fearful overnight. Hype-driven narratives rarely give this existential threat the weight it deserves. Another critical risk, often overlooked by hype, is competition and technological obsolescence. While Bitcoin was the first and remains the largest cryptocurrency, the space is filled with thousands of other projects. Some of these newer blockchains offer faster transaction speeds, greater functionality through smart contracts, more energy-efficient consensus mechanisms. There is a persistent, albeit small, risk that a new technology could emerge that is so superior it eventually unseats Bitcoin as the dominant digital asset. Furthermore, the discovery of a critical bug in Bitcoin's code, though highly unlikely, could shatter trust in the network and have devastating consequences. The hype machine preys on a powerful human emotion, the fear of missing out, FOMO. When prices are rising rapidly and headlines are filled with stories of overnight millionaires, it creates an intense psychological pressure to buy in, regardless of the price. This often leads to people investing at the peak of a bubble, just before a major correction. Many who bought into the hype of previous cycles ended up losing a significant portion of their investment and selling in despair. A wise investor understands that hype is a marketing tool, not a sound investment strategy, and that chasing parabolic moves is a recipe for financial pain. So, what is the right approach for a normal investor looking at Bitcoin in 2025? The answer is not found in trying to perfectly predict whether a boom or bust is imminent, but in adopting a clear, disciplined, and sober strategy. First and foremost, the principle of diversification remains paramount. No single asset, especially one as volatile as Bitcoin, should constitute the entirety of your investment portfolio. You should only allocate a small percentage of your capital, an amount you can genuinely afford to lose without it impacting your financial well-being. Second, cultivate patience and adopt a long-term mindset. The Bitcoin market is not a get-rich-quick scheme, despite what the hype may suggest. This means avoiding the temptation to constantly check the price or make rash decisions based on short-term market noise. Set a clear plan for your investment and stick to it. Emotional discipline will be your greatest ally in weathering the inevitable storms. Finally, actively resist the fear of missing out. When the market is in a frenzy and everyone around you seems to be making incredible gains, it is natural to feel an urge to jump in head first. This is precisely the most dangerous time to invest. Instead of following the herd, commit to continuous learning. Understand the technology, read the counter-arguments, listen to skeptical voices, listen to bullish voices. A well-informed investor is far less likely to be swayed by market euphoria or panic. Make your decisions based on your own research and risk tolerance, not on a headline or a social media post. In conclusion, whether Bitcoin's price in 2025 lands closer to a modest new high or a spectacular peak remains one of the most intriguing questions in modern finance. Growth is possible, but it is unlikely to be the smooth, instantaneous rocket ride that some promise. So, what is your take on this? We invite you to share your thoughts and your own Bitcoin price prediction for 2025 in the comments below.